Hi friends, this is Madhu Reddy from Money Breeder. Today I am going to discuss about the price and volume analysis. Before going into the discussion, this is the standard disclaimer. I am not a SEBI registered analyst or advisor. Please do your own research before buying and selling any stocks. Okay, this is not a stock recommendation. This is just for the learning purpose. Whatever my learnings I would like to share with my friends. As part of it, I am making this video. Okay. Today topic is price volume relationship. Okay, how we have to identify the reversals based on the price and volume analysis, and also what is the anomaly. What Dow theory is telling with respect to the price and volume relationship. All these things I am going to discuss. Okay. Coming to our topic. See, if you see the Dow theory says, okay, 6 main components. Okay, in this I am not interested in all these things. I am interested in the fifth point. Okay, volume must confirm the trend. Volume must confirm the trend. Okay, let's discuss what it is and how it is helpful for our trade. Okay, so this is the topic I wanted to discuss today. So always let's take an example. One stock trading at 100 rupees. Okay, that means this is the LTP, last traded price. You submitted a order for 100 stocks, okay, at 100 rupees. But what happened was, after executing your 90 stocks, the seller is there to sell only 90 stocks at the price of 100 rupees. Okay, and another seller is there. Another seller is there to sell 101 rupees. Okay, so in case of your order, you submitted the 100 stock, but 90 stocks are executed by the seller. Okay, remaining 10 stocks are in pending. In between, somebody there is no seller for 100 rupees, but there is a seller for 101. Somebody came in between. Your 10 stocks are in pending. Somebody came, they submitted the order with some one stock. Let's take example, one stock with market order. What happens? This one stock is going to execute with this price, which is 101. Okay, the latest price is going to be LTP. So in your case, 90 stocks executed at 100 rupees, one stock executed at 101. Okay, now the current price is increased to the 1%, right? 1%. 100 is becoming like 101, 1%. How many volumes are there here? Only one stock, one person submitted with 101, so 1% up. This is hypothetically I am taking the example. Okay, so after this one stock trading, right? If somebody comes, submit the order, one more 100 at 99 rupees. 99 rupees, but there is no sellers. There is no sellers at 99. Only 1 or 2 sellers are there at 1 or 2 rupees. What happens? This is going to be the pending order. Somebody comes and they execute the order with same like 110 with 1 or 2. So now the price, the sellers, they are demanding the price. The sellers, they are asking for the more price. That means the buyers are also there. more buyers. Now see, 90 your orders are pending. In the first order 10 is pending, other person submitted 101, but for this all these things, right, 99 is the price, 100 is the price, 101 is the price, but people are there at 102 only, the sellers. Now it's a time for the sellers. Okay, if this 102 price, right, for this price, if the huge quantity somebody comes and buy for the 1000 quantity at 102, that means this is the real price. Okay, the demand and supply. Okay, this guy feeling worth to buy for 102. Okay, whereas other case, let's assume this guy is not there, this 1000 stock is not buying, only one stock he bought at 101 rupees. Okay, other persons came and they are selling for 99 itself. Okay, more than 2000 stock. That means this 1 rupee, the 1% went because of this market order. This is not sustainable price. That means for any price, any price move, upside or downside, any price move, it has to be sustainable move. Okay, for sustaining that price, the further activity, further people, further orders should be there. Okay, to support this previous order. Okay, so as long as that is there, that order is there, that support is there, the market goes. That means this orders, all these orders, right, we call volumes, right. These are the volumes. Okay, if the volumes are more, demand will going to be the increased. Okay, along with the price improvement, volumes improvement is there, means the price, whatever the move is sustainable. Okay, move is sustainable. If the price is falling, volumes increasing. Okay, price is falling, volumes increasing, the price is, okay, price in the downtrend it is sustainable. Okay, the trend here, uptrend is sustainable and downtrend is sustainable. Only these two cases, the price is sustainable, the trend is sustainable. Okay, rest of other cases, you take the other cases like, okay, if the you take the upper case, the price went up. Okay, this is the price candle, daily candle. Okay, volumes also reasonably high. Okay, this is justified. The prices went up. Okay, but the volumes are not supporting for the price. For this price, volumes are not supporting. That means this price is not sustainable price. So this kind of things, when it happens, okay, let's say stock is running to the highest level. Here this is the called supply zone, right? When it reaches to the resistance zone, okay, here you can see breakout with a huge change, but the volumes are not supporting. If the volumes are not supporting, so this breakout is going to be the fake breakout. So whenever the breakout happens, the volumes must be supported on the daily time frame. Okay, if this is not happening, the price is moving very high, the volumes are not supporting, this is the exhaustion candle, the trend, there is a trend reversal sign, there is a trend reversal sign. This is also called, this behavior is called anomaly. Anomaly in the sense just deviation in the price and volumes, two entities here, the price and volumes, the deviation we are seeing. Let's say a stock went up by 10%, the volumes also should be go 10% up, at least 10% up. Okay, at least more than 10% should be there. More than 10% in the sense, let's say total number of shares are 1000 is there in a company. That means the 10% means 100. Every day average 100 trades, 100 shares has to trade. This is the 100 value. The value, one guy sells 100 stocks, other guy sells the, one guy sells the 100 stock, other guy buys the 100 stocks. So total volumes are 200. That means this value should be always more than what is the price percentage in the total number of shares. Okay, if that is there means the price is sustainable. That is the simple mechanism we need to find out during the breakouts. Okay, go to the delivery volumes where you can see the delivery percentage, total traded stocks. Okay, what is the volume, what is the delivery percentage, total number of stocks in that company, and you calculate based on this 10% move how much it is going to happen. Okay, all these things you can calculate. So whenever the price move and volume both should have the sync. Okay, directly proportional. Okay, the trend and volume, the trend is downtrend, volumes always will be the higher, should be there. Okay, if the trend is uptrend, volumes always will be the higher, whatever the trend is. Okay, the trend, along with the trend, volumes should be there, then only the trend is going to be sustainable, otherwise the trend is never sustainable. Okay, if any deviations are there, trend is very high but volumes are less. Okay, trend is very high in the downtrend, volumes are very less. Okay, this behavior is called anomaly. Okay, this behavior is called anomaly. These anomalies, based on these anomalies, right, we can take the reversal trades. Okay, let's take a stock, one example. It reaches to the support level. Okay, after reaching to the support level, we can clearly see the anomalies. Okay, some anomalies we can see. Whenever we see this anomaly, okay, this is the first sign for the reversal. Okay, we can go with the bull call spread or bull put spread, something like that, with the strictest some stop loss, some smart position sizing, all these things. Okay, so these are the, for the shorter term it will be very helpful if you are able to identify these anomalies between the price and values. Okay, so what I always prefer is, I have automated something. Okay, this is my trading system actually. Intraday sometimes I trade. Okay, some of the stocks my system saying some anomalies are found. Okay, these are the anomalies found, these are the stocks I listed here. Okay, this is the trading view window. I see some anomalies in this Apollo tires. Okay, Apollo tires having some anomalies. Similarly, Adani Enterprises also I see some anomalies are formed. Okay, this anomaly is saying me, okay, there could be a price reversal in this zone. Okay, if we see, right, this is the where the support zone, and also my system saying where is the Adani, my system is saying, okay, anomalies found. Okay, some automation. Okay, all these values are going to change in the live market, and immediately I will get anomalies found. Any anomalies are there means I will get it. Okay, so in the stock I see some anomalies. If we go for the daily time frame, okay, the price here, right, the price is 28% fall. For the 28% fall, volumes are very less. Okay, here the same 28%, here if you see same 28%, volumes are very high. What it means, what it is saying is, here when the people are trying to sell, okay, buyers are very less. That's what happening was, there is no buyers, people willing to sell for the lesser price also, there is no buyers. That is what it is saying, right? There is more supply is there, but the demand is not there. That is what these volumes are telling. Whereas next day also, okay, even there are sellers, more sellers are there, relatively buyers also there, and also many people might have traded. Let's take the example like, okay, the volumes are very high. Okay, what might be happened for the volumes are high but price is falling means they might have sold out in the morning. Okay, keep on buying, selling. Okay, one transaction, if you sell the 100 stocks and buy the 100 stocks, right, total volume is 200. So in some price range people keep on doing the buy sell, buy sell, buy sell, buy sell. That is what the price is falling, volumes are very high. So relatively the buyers and sellers interest is getting improved in this stock. Okay, so that is what it is saying. The fall and the volumes, there is a still there is a anomaly. Okay, next day if we see, right, it is completely reversed here itself in the volumes, right. It was the free fall, nobody willing to buy. Next day somebody came and they tried to utilize in the intraday moves. Okay, buying and selling at important level. Next day completely scene changed. It fallen like 9,034. Okay, let me see which is the lowest 1017 is the lowest yesterday. Once it fallen, people came and started buying. This is where the price and price move is 1% fall and volumes are there. There is a anomaly that indicates that tomorrow the stock might be the giving some reversal hint. Okay, I am not recommending to go and trade in this uncertainty stocks. Okay, when the stock having uncertainty, don't trade. Okay, in case if you wanted to take the more risk, go for the scalping kind of thing. Okay, let me take other company, Birlasoft. Okay, what I was trying to tell is anomalies always forms at the support and resistance levels. Okay, if we take this stock, right, what is this? This is the zone, right? This is the previous low support zone. Okay, this is the previous low it reached and the support zone. Because of the support zone, price is trying to fall. If we go to the lower time frame, what happened here? See the huge gap down, because this is the demand zone where buyers are there, more demand is there for the stock. People came and started buying. So that means this is indicating that tomorrow there could be some buying interest in this stock. So we can identify the stock and we can keep in the watch list. Okay, this is the previous day high, right? This is the previous day. What happens? What is the breakout meaning? The breakout meaning is when the previous price breaks, right? This is the breakout. This is the previous high. What is the previous high in this case? In the shorter term, this is the previous high. Okay, if this breaks, this is called breakout. Till next what price it probability is there, it may go till this point. Okay, 280 levels. Then it will go till this point. Then here huge sellers might be there. So once it reaches here, there could be some decline, some profit booking or some decline will be there. So the moment we identify this kind of anomalies, right, in the daily time frame, okay, you have to look carefully. Okay, when the price is fallen here, if you see when the price is fallen 8%, these volumes are very less. When the price went to 1% only here, that means more volumes are there. More number of traders came here, buying, selling, double quantity they traded. That's what, even though price is less, okay, people are buying, selling, in this stock. So some activity is going on. That is what we are seeing some anomalies here. Some anomalies we are seeing here in this stock. Okay, like this. Okay, any stock if that reaches to the support level, okay, we can see some interesting things. Let's take another example, HDFC Bank. As per my system, HDFC Bank is having the anomaly. Okay, see here the price fall was there, right? For 3% fall, okay, less volumes are there. Next day the 1% and this gap down, all these things is there. Okay, but volumes are more. Okay, if you see the average volume, right, here the average volume, if we see, right, for the 3% up, right, the volume supposed to be more. Okay, the volume activity is supposed to be more, but here if we see, right, the volumes are not that much great. The reason might be there could be this price might be there is a supply and demand issue in this stock. So this price, whatever the 3.5% went up, may not be the justified price for the yesterday's. So there could be a chances of correcting this price. Okay, there could be a chances of correcting this stock. So we shouldn't, if we wanted to go for the trade in this stock, we are seeing some anomalies. Okay, this price and volume is not justified as per our analysis. Look for the selling opportunity. Okay, let's go to the 5 minutes time frame. Okay, let's go to the 5 minutes time frame. You can identify. Okay, go to the lower time frame, like, okay, this is where what happened, this is the region, this is the previous high, it might be the reaching to the, okay, resistance zone. Here the resistance is there. If the breakout failure happens here, 1665, if not able to go up, means, okay, there could be a chances of falling the stock tomorrow. Some trade, okay, in intraday 1% or 0.5% will give us very good amount. So as per my price action, right, this is where the, okay, this is where the supply zone is there, this is where the demand zone is there. Okay, from the demand zone the stock went up till this point. After moving the 3.5%, the volume and price analysis is not giving the conviction to me, so there could be some reversal signal it has given. I am not sure. Okay, it may break out, and tomorrow also one more anomaly may form, and it will go. Okay, so it is not 100% always works out. So this is a probability. Just we have to identify the probability of having the stock, add to the watch list, and you can trade by having the strict stop loss. Okay, and coming to the other stock, Birla Soft, HDFC. Okay, any other stocks, let us find out. What is this? ICICI Bank, same anomaly is there. Okay, as per my system. India Cements is there. Infosys, let's analyze the Infosys company. Okay, Infosys, why it is showing Infi? If we go for the daily time frame, right, okay, the price, see here the price went up, the first it fallen the price. If we go to the lower time frame, it's showing like anomaly is there, the price fallen, but some buying interest is there in this company. Even though price is falling, it reached to the level where the supply zone might be there. Okay, let's go to the highest time frame. Okay, what happened? This is where the, okay, this is where, okay, if we see on the weekly time frame, what happening, it is off retracement, right? Okay, so it reached to this off. Okay, the consistent move was there could be some decline in this, so people are believing that, okay, it may not go further up, it may come down. That is what the people believing. And also here some wicks formed, right? Here also wick formed, and here also wick formed. There are some selling interest as well equally. So even if this goes right, maximum some profit booking we can see in the, after this much big move 5%, some profit booking came yesterday. That is what it is indicating. So the people interest, the buying and selling activity is not matching in this company. So this is also one stock we can have in our watch list, and we can trade. If this sustain above this previous day high, that means it will go to the next level. Otherwise it may come back to the same level. Like this, we have to identify the stocks by using this anomaly. This is the one of the behavior. The volume must confirm the trend. Okay, if the volume should be higher, trend also should be higher. There is a discrepancy between the volumes and trend. That means it is the anomaly. Okay, by identifying this kind of anomalies at support level and resistance level, we can have the scalping in intradays. Okay, so this is what we have to utilize this behavior, people behavior. Here the totally it is psychology, right? The buyers sellers psychology. Just we have to utilize this behavior and trade accordingly. Okay, This is how I would like to bring your notice how to identify the stocks with anomalies and volume price discrepancies, and utilize the opportunities in the companies. Similarly, same Reliance also I observed some anomalies. Okay, as per my system, Reliance showing some anomaly. Reliance shown some anomalies where the price is going up every day. It is getting Reliance anomalies found. Okay, if we see what is happening in the Reliance by chart, right? In the morning every day it is gap up. After that it is falling. Okay, last 3 days it is happening like that only. Morning it is coming. Okay, but it is acting like there are buyers, but finally somebody is pushing up, then pushing down. So whenever it is reaching to the supply zone, right, strong supply zone, okay, this is the strong supply zone. Whenever it is reaching to this zone, it is trying to fall. Okay, so some activity is going on. At the same time, if you see, right, the reason for anomalies is it reached to the demand zone. Okay, where the previous low was there. Okay, because of this, so you cannot take the buy position in this by believing this. Okay, there could be some here some activity. They might be creating a lot of short positions. It may further go down or it may goes up. Okay, many times what retail people with less money, right, what they think is they think like, okay, if we buy here, since it is support, if we buy here, it will go up and we will get the huge money. That is what the people will have. What happens, during the this much fall, right, there could be some retracement. That retracement may happen on the same day or may not happen on the same day. If we see, right, 4 days it is trading in the same range. Okay, opening with the gap up and coming down, opening with the gap up and coming down. Okay, if let's say you could have bought here CE at 50 rupees, what happens? This 50 rupees, because of the 4 days time decay, this might have gone to the 40 rupees, and 10 points you might have lost it. So don't buy this kind of stock until unless the trend is there. Okay, if you want it to be a buyer, the trend must be there. Otherwise, what you can do here is, if you believe the stock may reverse it, then what you have to do is you sell the 2300 PE. Okay, if you sell this PE, go to the a little far out of the money. Okay, 2240 or 2220 of premium, or 45 delta you sell. Okay, 17 delta you buy. That is the best approach for getting the good risk reward. Okay, always instead going buying side, okay, better go to the sell side at the support levels. It may reverse or may not reverse. Whereas in case of the resistance level, right, here people will have the fear. Okay, people will have the fear. That is where the stock fall might be very quick. Okay, here also you can the reversals always, the trade will be the intraday, very quick trade we have to capture. Otherwise you can go for the sell side. Don't go for the buy side and hold the position for 2-3 days. Okay, and also you must have the hedge, or stop loss may not be hitting, because this is overnight position. So gap downs and gap ups may create the problems. Always you have to look. Okay, this is the behavior, standard behavior. Okay, people behavior. Okay, this is the people behavior. If we see, right, the volumes. Okay, when the price is going up, the volumes for 3% up, right, huge volumes are there. But here the price is not at all moving. Same level of volumes are there. Okay, what it means? And also the color is red color. So sell orders are more than the buy orders. Okay, so somebody is trying to push the price down up by seeing these values. We are understanding that. So we should not add now. Okay, until we get the confirmation on this stock. Okay, this is how we have to justify the price move and value move always should be in the sync. Okay, the sync is missing means some suspicious activity is going on in any stock. Okay, that we will come to know after the event or after the falling only we will come to know. Okay, so until the time we have to be very cautious and trade with the hedge. You must trade with the hedge. Okay, that's all about today topic, that is price and volume analysis. Okay, discrepancies between the price and values, that behavior is called anomaly. Okay, whenever you see the anomalies, right, you can plan the reversal trade, okay, against to the trend. It is in the falling, so you have to look for the buying opportunity, because the after a big fall, right, there could be some buying activity, some anomaly is going on. Okay, if you believe some buying, better go for the reverse trade, that is PE sell. Don't buy the position, overnight position always. Okay, it may reverse quickly or it may take longer time for the consolidation. Okay, a lot, this is the very big company, right, you cannot see the you may see the volumes, but the price movement may not be there, because intraday selling, buying 100 stocks I sell for at 2-300. Okay, but since the price move is not there, I can buy for the 2-300 only. That means the relatively price is not moved, but volumes went up very high. So this is where activity is there, but the price is not there. Okay, that activity is going to be the downside or upside, we never know. Okay, that is what we have to trade with very smartly. Okay, so that's all from my side for this video. Thank you friends.